3:17 a.m. The notification appears on your phone. The banking app shows a blank screen. By 4 a.m., the first emergency calls begin flooding regional operations centers across 3 continents. Payment processors report failed transactions. ATMs in 14 major cities display error codes nobody has seen before. The AHA system, the digital backbone that processes trillions of dollars daily, has stopped acknowledging transactions. Not slowly, instantly, like someone flipped a switch. In that moment, access to money doesn't fade, it vanishes. The balance in your account still exists somewhere in a server cluster, but you cannot reach it, and neither can anyone else. This is not a story about the collapse of currency. This is a story about the collapse of access. Modern banking is a miracle of invisible infrastructure. Your money exists simultaneously everywhere and nowhere. It flows through fiber optic cables, bounces off satellites, updates in microseconds across a dozen databases. History teaches a simple lesson. Access can disappear faster than money itself. In 2008, customers formed lines outside IndyMac Bank in California, not because deposits were gone, but because trust evaporated. In 2001, the September 11th attacks severed communication networks in New York. Nearly 40% of payment processing failed that day. Banks remained solvent. The money was still there, but for hours it was unreachable. ATMs went dark. And in 2022, during Canada's trucker protests, the government froze bank accounts by executive order. Digital money became inaccessible to citizens overnight, not through technical failure, but through political command. The question you should be asking is not if money will disappear. The question is what happens when you cannot touch it. You wake at 6 a.m. The screen still shows nothing. You try your laptop. Same result. You check the news. The first headlines appear. Major bank outage reported across multiple states. No explanation yet. You assume it will be fixed by noon. You have a meeting at 9 a.m. You need coffee first. You pull into the drive-thru. The barista leans out the window and says, "Cash only, system's down." You check your wallet, $12. You buy the coffee and leave. The gas station is next. The pumps are offline. A handwritten sign taped to the nearest one reads, "Out of service." You drive to the ATM outside your bank. There's already a line. When you reach the machine, the screen blinks once and shows a maintenance message. You get back in your car. The radio is playing something about a technical disruption affecting multiple payment networks. Still no explanation. You go to work. By 10 a.m., the office is buzzing. People are checking their phones constantly. Someone says they heard it's a cyber attack. Someone else says it's just a software bug. Nobody knows. At 11:30 a.m., the company sends an email. Due to payment processing issues, payroll may be delayed. Employees are advised to carry cash for immediate expenses. You leave early. The grocery store parking lot is more crowded than usual. Inside, the checkout lines stretch to the back of the store. Every register has a small sign propped against the scanner. Cash only. You see people abandoning full carts. Others are pulling crumpled bills from pockets, counting slowly. You grab a few essentials: bread, canned goods, bottled water. You pay with the last of your cash. At the exit, you see a woman arguing with the manager. She's holding a debit card and saying, "It's not my fault your system is broken." The manager shrugs. By 3 p.m., the first rumors appear on social media. Some claim the outage is nationwide. Others say it's affecting Europe, too. A video circulates showing long lines outside a bank in London. Another shows police stationed outside a branch in Chicago, preventing customers from entering. You try calling your bank. The line is busy. You try again. Still busy. At 5 p.m., the first official statement is released. A coordinated cyber attack has disrupted multiple financial institutions and payment networks across North America and Europe. Systems are being restored. No customer funds have been lost. Please avoid unnecessary withdrawals. The statement is meant to calm people. It does the opposite. By nightfall, the streets look different. Gas stations that still accept cash have lines stretching onto the road. Convenience stores are closing early. A $20 bill is nearly useless if the clerk cannot break it. You see a man offering $50 for a tank of gas to someone paying at the pump. The offer is refused. You return home. The news is wall-to-wall coverage. Analysts are debating who launched the attack. Russia, China, 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 North Korea, a non-state actor. Nobody agrees. What they do agree on is this: the attack did not target money. It targeted movement. The payment clearing systems, the ones that allow money to flow from one account to another, have been paralyzed. Fedwire, the system that settles large transactions between banks, is offline. The automated clearinghouse, which processes payroll and bill payments, is down. Card networks are partially functional but unreliable. In technical terms, the infrastructure has been severed. In practical terms, digital money has stopped moving. Banks insist deposits are insured. Regulators urge calm. But insurance protects balances, not access. When you cannot withdraw, transfer, or spend, your balance is a number on a frozen screen. Day 2 begins with uncertainty. You have no cash left. The ATMs are still down. No checks are being cashed unless verified manually. The process is slow. People wait for hours. You skip the line. You have food for a few days. You decide to wait it out. But waiting is not an option for everyone. By midday, the city starts to fracture. Those who prepared, who kept cash at home, who stockpiled essentials, move through the disruption with relative ease. Those who did not are stranded. You see it at the pharmacy. A man is trying to buy insulin. The pharmacist tells him the system is down. He cannot process the insurance claim. The man offers to pay out of pocket. The pharmacist asks for $200. The man pulls out his wallet. He has $37. You see it at the gas station. A woman is sitting in her car at the pump, crying. She has no cash. No one will help her. Eventually, someone does. A stranger hands her $40. She fills her tank halfway and drives away. The third day is worse. Businesses that rely on digital transactions begin to close. Restaurants stop accepting reservations. Delivery services shut down. Even hospitals are struggling. Medical supplies are delivered on credit terms that depend on electronic invoicing and payment. When the system stops, the supply chain stalls. Elective surgeries are postponed. Some patients are turned away. The government issues another statement. Emergency measures are being implemented. The Federal Reserve is providing liquidity to banks. FEMA is coordinating with local authorities to distribute cash. in affected regions. Citizens are urged to remain calm. But calm is not an emotion people feel when their money is locked behind a digital wall. You see neighbors talking in the street. One says he heard the power grid might be next. Another says the attack is bigger than anyone admits. A third says it doesn't matter. If this lasts another week, the city will run out of food. You don't know if that's true. You don't know what to believe anymore. By day 4, patterns emerge. Barter begins. A man trades a case of bottled water for a tank of gas. A woman offers to clean houses in exchange for groceries. A mechanic fixes a car for $40 and a bag of rice. It's not efficient. It's not scalable, but it's survival. Precious metals surface. Some people try to use gold and silver coins. Most merchants refuse. They have no way to verify purity or weight. Making change from a gold coin is impossible. The coins sit in pockets, worthless in the moment. Cryptocurrency is mentioned, but it's irrelevant. The internet is still functional, but wallets require electricity, devices, and trust in a system that just collapsed. Most people don't have cryptocurrency. Those who do cannot spend it anywhere that matters. What works is cash, small bills, 1s, 5s, 10s, 20s, the kind that actually circulate, the kind you can hand to someone without needing change, the kind that doesn't require a network, a password, or a functioning server farm 1,000 miles away. Day 5 arrives with a breakthrough. Some payment networks come back online, limited functionality, regional access only. You try your banking app. It loads. Your balance is still there. You exhale. But when you try to transfer money, the transaction fails. The system is live, but it's not working. Not yet. You hear reports that some ATMs are dispensing cash again. You drive to the nearest one. The line is 2 blocks long. You wait. 3 hours later, you withdraw $300. It's the daily limit. You take it and leave. On the way home, you pass a bank branch. The doors are locked. A sign in the window reads, "Withdrawals by appointment only." You keep driving. By evening, the news reports that systems are being restored incrementally. Full functionality may take another week, maybe 2. Customers are advised to use cash whenever possible. The irony is not lost on anyone. Day 6 feels almost normal. Some stores accept cards again. Gas stations reopen their pumps, but the fear lingers. You notice people carrying more cash than before. You notice lines at banks are still long. You notice a new phrase being repeated everywhere. Just in case, the phrase appears in conversations and social media posts and government advisories. Keep some cash on hand, just in case. The lesson is being learned in real time. By day 7, the worst is over. Payment systems are operational. Banks are processing transactions. Life resumes, but something has shifted. People who never thought about cash are thinking about it now. People who trusted the system implicitly are questioning it quietly. And people who prepared, who kept a reserve, who understood that access and safety are not the same thing, are vindicated without saying a word. The official report comes 3 weeks later. The attack targeted clearing and settlement systems. The perpetrators remain unidentified. No customer funds were lost. The financial system is secure. The message is clear. Everything is fine. But the memory is not erased. You remember the blank screen, the frozen ATM, the cash-only signs, the insulin, the woman at the gas station, the lines, the fear. And you remember the $12 in your wallet that bought you coffee while the world paused. Experts had warned about this for years. In 2001, the Federal Reserve intervened aggressively after September 11th just to keep physical cash circulating. In 2021, a technical glitch took down Fedwire and AA systems for hours, halting billions of dollars in transfers with no warning. After COVID-19, surveys showed nearly 1 in 3 Americans began storing cash at home. Agencies like FEMA and Ready.gov had long recommended keeping physical cash as part of an emergency kit. ATMs and credit cards may not work during a disaster. The question was never how much. The answer varies by household, by region, by circumstance. But the principle is universal. 1 to 2 weeks of essential expenses in small bills. Not hundreds in large denominations that no one can break. Not gold coins that no one can verify. Not cryptocurrency that requires infrastructure most people don't have. Cash. Simple. Immediate. Functional. What this event revealed is that preparedness is not about predicting collapse. It's about acknowledging friction. Systems that work perfectly under normal conditions fail abruptly under stress. And when they do, access becomes the only thing that matters. Your balance is irrelevant if you cannot reach it. Your insurance is meaningless if the claim cannot be processed. Your trust in the system is useless if the system is offline. Preparedness is the space between failure and recovery. It's the difference between waiting and acting. It's the quiet decision to keep a reserve, not because disaster is inevitable, but because interruption is possible. The days pass. The ATMs refill. The card readers reconnect. The app stops freezing. The system returns. And with it, a dangerous comfort. People forget. They assume it won't happen again. They trust the assurances. They believe the next attack will be stopped, the next glitch will be fixed, the next disaster will be managed better. Maybe they're right, but history suggests otherwise. In 2008, trust evaporated in hours. In 2001, communication failed in minutes. In 2022, access was revoked by decree. And in 2026, the system paused for 7 days. Next time, it might pause longer. Next time, the fix might take weeks instead of days. When the screen goes blank, the people who survive are not the ones with the largest balances. But because you understand infrastructure, not because you expect the worst, but because you prepare for interruption. And when the next disruption comes, whether it's a cyber attack, a grid failure, a storm, or something no one predicted, you will not panic. You will not argue with clerks or beg strangers for help. You will move forward. Because you were ready, not loud, not paranoid, just ready.